Good morning, folks, and welcome to a brand new episode of FinMet Mondays. Sunil and me are back after a long 2 weeks. Seems like a long 2 weeks, certainly. And a lot has happened in these last 2 weeks since we covered developments in gold and silver in the markets. Sunil, welcome to the podcast, first of all.
Thank
And
you.
on Friday, we saw the inflation data come out. On Thursday, we saw the US GDP data come out. Both of them had certainly an effect on how gold moved. Could you summarize your understanding of, what the developments were and how that shaped the gold markets last week?
Yeah. Well, 2 weeks has been as a long time. I think last time we were in the 1800s. Last time we talked, and now we're at the 2000s. So it's a big change in terms of the general scenario in the market. I think Friday, what we saw really was. Um, right, getting into the weekend, the stock markets were very weak. The mood became a little bit bearish, and people said we're getting into the weekend. Israel is probably going to do the counteroffensive during the weekend. So people basically liquidated a lot of equity bond positions and jumped into gold. And what happened there was that when they went into gold, it just needed a little bit of push, and we broke that critical 1988 level that you had mentioned in the last time we talked. And so as soon as we broke that, we went all the way to up to 2005, and it happened in very, very light trading. It just happened, the COMEX market closes at around 1:30, and all of this action happened between 1 and 1:30. And by 4 o'clock, the equity markets also were closed. So I think there was some thin trading, and you may see some amount of reversal, but it's all driven by the fact of gold as a safe asset and people moving into gold.
Yeah, in fact, this was the third consecutive week that we've seen a absolute spike on the
On
Friday,
Friday.
just heading to the weekend. So yeah, we've been seeing a pattern of late of
Yeah.
this.
Yeah, this
Um,
always happens when there's a war or there's some kind of socio-political issue, geopolitical issue. We've seen this in the past also. We used to see it when the Gulf War was happening, when the US action in Iraq was happening. So this is typically what happens when there's uncertainty in the geopolitics.
Turning attention to the Fed interest rate decision next week, it is very likely that we're going to see the Fed leaving interest rates unchanged. What would it take for that outlook or that decision to change?
I think already the Fed has signaled that it's cautious, but it's not going to jump the gun. The data so far hasn't been so strong that they need to move immediately. But what you will find is they'll make lots of statements like, "Oh, we're going to do it in December." If there's even one data point which signals to us that prices are not under control, we're just going to go for it. So I think nothing happens at the end of this meeting, which is on Wednesday and Thursday, 31st and 1st. But December definitely is on. And if the data continues to be strong, there may be a little bit of a push for them to do something. You should notice also that the ECB has kept rates flat. So that's why I think the Fed has enough reasons not to act this week.
Quickly wanted to just showcase the Fed watch tool as well. So this kind of reiterates your point, which is, we're going to see there's a 99.9% chance of the Fed leaving interest rates unchanged at the Wednesday to Thursday meeting. And interestingly, we also have this information of how does the probability of Fed rate hikes change as we are nearing the Fed policy meeting, right? So here you have the rates for the probability of an interest rate hike for November. So as you see, we are nearing towards the November meeting. Gradually, I think what has come about is a lowering and a more decreasing probability of interest rate actually increasing or the Fed announcing an interest rate hike. So this is interesting. I wish we had the data for December because that would be the more pertinent one that we could really base our decisions off of. But yes, this is what even the data from the Fed watch tool itself is confirming. Switching to the technicals, Sunil, um, we did speak about last time that 1987, somewhere around here, was the critical resistance. Well, that was broken. And we are right now at the 2000, 2005 to be precise. Now, where do we go from here exactly? So there are two resistances I want to sort of lay focus on. One is the 2021 resistance, and one is the 2049 resistance. Next week, I do think we are going to see a pullback. There are multiple factors. Definitely the Fed interest rate decision. Definitely the non-farm payrolls numbers as well. You've seen non-farm payrolls generate a super strong reading in October, indicating that the labor market is very strong. I don't see why that trend might not continue. And as a result of that, we are going to, it's going to keep Fed is going to leave the room open for one more rate hike, at least in December. So there is a combined effect of fundamentals as well, an exhaustion of the bullish rally upfront as well, where we don't have much buying support. So as a result of that, we do expect markets to correct back to 2000 or maybe to even 1990 and then continue that leg up if there is enough momentum in the markets.
Also, the RSI also is overbought at 70 plus, right? So that
Yes.
also is a signal where I think we're looking at a reversal early next week. Yeah.
We hope that the markets behave in the expected manner as we've as we've come to see. But let's
Let's
see how the markets play out. But till then, thank you so much and goodbye.